How long can a life insurance company take to pay a claim? When about purchasing a life insurance policy, one of the most important things to consider is the level of peace of mind it will provide. When you know that your loved ones will be okay financially, it is a great weight off your shoulders. But what happens if anything does go wrong and you need to make a claim with the insurance company? How long does it normally take for life insurance to pay out? We will address all of your concerns concerning life insurance claims in this article. How long does an insurance policy take to cash out? The typical life insurance payment might take as little as 2 weeks and as long as 2 months. There are a number of things that influence the time frame, though. It is your life insurance company's responsibility to pay your beneficiaries should you pass away while your policy is intact. Hence, your family will not have to worry if they do not have someone making a living to support them. When it comes to filing a claim and receiving the death benefit, there are several factors that determine the time. One of the most crucial considerations is the time and manner in which the insured died. All insurance companies have their own set of restrictions, so be sure to find out what they are. How long does it take for a beneficiary to receive money? Whether you will get your death benefit depends on how fast you submit your request for payment of the money. The majority of consumers may expect to get their money within 60 days. Timing depends on a number of factors, including the period of time following a person's death during which they may submit a claim, providing the paperwork that is necessary for the insurance claim, the period of time during which the policy was in effect, the cause of death of the insured, state laws governing insurance policies. Some states require life insurance firms to cross-check their list of policyholders against the Social Security Administration's death data. This is to prevent individuals from receiving benefits that they have not requested. Making your own life insurance claim is the best way to ensure that your claim completes as promptly as possible. You may submit a claim with a life insurance company either online or by calling them personally. What causes life insurance claims to be processed or denied for a long period of time? With the necessary documentation, any legal claim for death benefits may be submitted. Providing you have evidence to establish that the policyholder has passed away and that you are the policyholder's beneficiary, you should have no trouble filing a claim. Some claims, on the other hand, may delay or refuse due to the following reasons. How the insurer died. When a policyholder dies while participating in an activity that is not covered by their policy, such as bungee jumping, you will not be entitled to a death benefit from the insurance company. Insurance fraud. The insurance company will investigate the death. Depending on whether the policyholder has miscommunicated on their insurance application or if there are troubling circumstances surrounding their death, the insurance company may decrease or refuse the payout. Paperwork or policy that has gone missing. In order to make a claim, you'll most likely need a copy of the deceased's insurance policy. In the event that you do not know where to look for it or other essential papers, the claims procedure will be delayed. The policy had expired. The death benefit will not cash out if the policy owner stops paying their premiums and let their policy expire, since their coverage is no longer valid. Death during the contestability period. A death that occurs during the first 2 years of a policy is contestable. As a result, the insurer may examine an insurance application for possible fraudulent activity. This may create a delay in the payment of the death benefit. However, you will still get the whole amount as long as the death was honest. What is the procedure for paying out life insurance benefits? When it comes to receiving life insurance payments, beneficiaries may select whether they want the money in one lump amount or in many installments. There are a variety of options available to those who choose to receive their pay in installments. These include the following. Lump sum payout. It is the most frequent payout form. This is because it assists beneficiaries in covering expenses incurred as a result of the policyholder's death, which is why it is the most popular. These payments are exempt from taxation. Payout in installments. An annuity is a kind of insurance coverage that permits recipients to receive the death benefit in set payments. It happens over a certain period of time if they do not want the money right away. Any interest generated on the annuity is subject to taxation. Retained asset account. The money is held in an interest-bearing account by the insurance company. You may withdraw cash by check from that account. The beneficiary may have to pay tax on the interest amount. Takeaway. One of the most often asked concerns we get regarding life insurance claims is how long it takes for processing. Answering this question depends on a variety of conditions, but in general, you should anticipate getting your reimbursement within 30 days. Every circumstance is unique, and there are always exceptions to the norm. However, in the majority of situations, you will get your money within a month. The insurance company will want some basic information about you and the policyholder. In addition, they will ask for a copy of the death certificate in order to complete the transaction. Sometimes they may also ask for further proof, such as medical records or an autopsy report. However, the procedure is rather basic, and you should be able to furnish what they want with reasonable ease.